welcome back to Golden Rule Radio, your weekly recap and outlook on the precious metals markets and the underlying technicals and fundamentals that move those markets. How quickly a week happens and how quickly a few years happen, how quickly we forget things and move on with our lives, but how quickly our emotions can come back to a certain topic. And that topic this week is the 9/11 event from 2001. Everybody's remembering it this week, so we will too. We're going to talk about where gold was at that time. Gold was at $270 an ounce on that day. $271, I think, was the bottom. And since that day, we have not seen gold at $270. It came back down a couple months later in 2001 and tested that, but it has not been back to that number. It's been in a steady bull market going up from 270 since 2001. And just under 7 years later from 2001, gold was above 1,000. So we had a fourfold move in gold after one of the biggest events in world history. So I put that out there because where are we now? We're sitting at about 1,200. Gold's just above 1,200 today on Wednesday. And where are we going from here? Well, we could talk about the technicals as we often do on this show. And then we could also talk about anything pending that could be another type of 9/11 event that totally changes the world. Because I think the 9/11 event in 2001 totally changed the mindset of investors to ask themselves, if this can happen, what else can happen? And if the financial markets are this vulnerable after something like that happens, then what? What do you think, Miles?
Yeah, Robert, I think it definitely shows at least the short-term vulnerability in just how people can react to things. I mean, obviously, the September 11th attacks, you and I were both in college when that happened. I remember that happening. I think like the Kennedy assassination for our generation, it's the thing that everybody remembers where they were when it took place.
Everybody remembers. I was ironically in physics class of all places.
I think I was sleeping in that morning because I remember sitting on my couch watching the news with the roommates and thinking to myself, okay, do I need to go out of school and join the military? Or are we going to war? You know, it's one of those real life-shattering, earth-changing events for everybody. And it was certainly market-changing, or at least aggressively market-driving. You know, looking back at the time, you talk about the lows we put in. We had actually put a low in a few months prior in the gold price. Before that took place, we had popped up. It was probably going to continue going lower than that, and it just halted on that day. And like you said, it never came back down to it again.
Even though 9/11 might not be front and center of your mind on a daily basis, I think that it is playing into the subconscious of a lot of people in the markets, and it's something that you live with and you move forward with, and you make decisions based on things that have affected you in the past. And I think it has played into the markets, especially with the price of gold.
Yeah, and Tori, who's not with us this week, loves to talk about the geopolitical and the fundamentals, and you look at the relations with the Middle East over that time period. You look at what oil pricing has done over that same time period. I mean, I remember back when Don McAlvany, the founder of our company, was talking about $100 oil, and people told him he was crazy. Now $100 oil is, which we've hit, just seems like a spit away. Where we're pushing up to about $70 on the oil price again right now, and it doesn't show any sign of stopping. So you have these economic drivers, you have these political drivers, but you can also have these events that take place that drastically change the way people think socially and economically, and can make severe impact going forward that do more than what I generally say. You know, I generally say all politics really does, all policy really does, is it just speeds up or slows down the direction a market is going anyway. You know, I tend to err more on the side of markets are living, breathing things that are going to do what they're going to do. But this wasn't policy. You know, this wasn't a government action or some new law getting added to the books. This was an out of left field, a genuine black swan event, and it really did change the mindset of the American public.
I think it changed the world, you know, the world's view on what can happen. And so if that can happen, what else can happen? So it leads me into thinking, where are tensions now with the world? We are in a very tense environment. Trump has somewhat escalated that tension, and we're also looking at domestic tension within our own three branches of government. We have a constitutional crisis that is on the verge of just completely unfolding. I mean, if you think about what backs the dollar, we'll get to the dollar index in a minute, but what backs the dollar is the full faith and credit of the United States government. Well, what if we have a constitutional crisis that actually unfolds to devalue that faith? I think we're already there. It just takes a little bit of effort or some event possibly that comes out of left field to then change it. Because if you look at where we were in 9/11, I don't think tensions were anywhere near where they are today. And if you look at what the market and gold did in the 7 years following, it quadrupled. If we go from anywhere we are now at a higher tension level and we have something like that happen, I don't want it to happen, but I think it's almost inevitable. I think everybody who's wanting to face reality would agree something's going to happen. It's just you feel it. And when something happens, if gold reacts anywhere near what it's doing, it's going to quadruple from here, which is going to put it about 5,000.
Well, sure. And I think your point on tensions is founded. I mean, look where whether you're on the left or on the right, social tensions between the two groups, I would argue, have certainly increased over the last 10 years.
Absolutely. That's evident.
But on the other side of that coin, I think it also shows the resilience of the American public as well. I mean, you look
Absolutely.
How the equity market has grown over the last 10, 15 years. Granted, a lot of that has been on the backs of the tech companies and the massive communication renaissance we've had over the last 15, 20 years and the computer renaissance we've had.
And the backs of debt being increased.
Well, sure. They had to pay for it all somehow, right? And since these monoliths of technology are all sheltering their assets in the Cook Islands and Ireland tax havens, obviously, the government had to pay for this stuff somehow because they're not getting their tax income from Google.
So with that said, I will move to what action I think people should take because both you and I, Miles, have been working for McAlvany to be able to see the cycle, the full cycle from greed to fear or fear to greed. I think we made a video of that about 10 or 12 years ago. And in those cycles, we have witnessed in our short careers here, a lot of guys have been here a lot longer, but we've witnessed these cycles of fear getting into the hearts of Americans only about 10 years ago. And now it seems like everybody's complacent.
Yeah, it's interesting you bring that up. I was having lunch with my folks and my sister and her husband this weekend. We were talking about some investment stuff. And we were joking around saying, you know, everybody talks about the whole idea of buy low, sell high, which is what you should be doing in commodities right now. But the reality is, and what I've seen over my last 16, 17 years in the financial world has been most people buy scared and then sell angry.
Absolutely.
And fear doesn't have to be fear of, say, again, getting back to where we started, a 9/11 type attack. Fear can also be the fear of missing out. In fact, I would argue the fear of missing out is the same reason people get addicted to gambling. You know, the fear of missing out is the reason people go and pull those one-armed bandits and keep pumping quarters into the system, keep pumping money into the Dow. You know, looking at the Dow, let's actually transition over to some markets since we've been just chit-chatting here for a bit. But looking at the actual markets right now, the Dow's pushing up to close that opening gap that we had back when the market first started to fall.
Yep.
So my question, obviously, is once we get to that point, could the Dow push further?
Of course it could.
Yeah, look at what the dollar's doing. I
mean, could push further with more tension and crisis happening because it seems to be pretty disconnected right now.
Sure, because if there's tension and crisis in Asia or in Europe, people, even overseas, are going to start looking at the American markets like they tend to. And if the U.S. dollar continues its water slide down, which looking at the dollar charts, it's having a hard time breaking into new high territory over the last month.
It is, and even maybe forming a head and shoulders pattern.
So the equity market pushes up to a new high, the dollar starts inching down. Nobody wants to touch Europe with the 10-foot investment pole right now. So where does that money go? Probably into the Dow and some commodities.
Yep. Mentioning the cycles that I mentioned we have lived through and experienced here is we had waiting lists when people had fear in their minds from the financial crisis 2008, almost for 3 or 4 years. We had waiting lists of people who had sent money to our company just to get in line for the next batch of coins that came to the market. Today, it's about the opposite. You can take your pick at what type of quality product you want to own. And I would say now is the time that you want to be acquiring something, not before we have another 9/11, Black Swan, whatever you want to call it, not before we have a government crisis, not before we have a debt crisis, whatever the crisis is that is actually the catalyst to move us into the next new world of 15, 17, 20 years of being a little bit on a different world financially. And you want to make a move before something unfolds.
Right. And you watch how the dollar's been reacting to some of these events over the last few months. We're nowhere near the old highs on the dollar. Granted, the dollar's had a good year, but I think we're probably running out of steam here. The dollar's been looking very weak over the last couple weeks. We've failed to reach the past highs. We've had a few previous highs that we keep just coming short of. Yet we keep setting new intraday lows. If we get below that August 28th low, then we're probably going down from there. If we get below 92.25, I'm calling for a retest of the February lows, 88.25. And that probably puts the Dow up a little bit higher. That definitely puts gold back up in the 1300s. So I'm still holding to my gold 1360 or above before the end of the year. I know we're closing in on it. We're just a couple months, but this stuff can happen quickly.
Sure.
The dollar can move pretty fast.
Before we close the show, we'll also mention gold. It's in the window that we've been talking about, the 3% range between about 1170 and 1210, sitting above 1200 today. Whichever way we break out of that, looks like we're going to actually break out of it to the north, but we'll see.
Sure. 1225 gold looks good. 1245 looks pretty definite at that point that we are going to get back up to the 1300s and above.
Silver held the low. Silver's right just above 14, even though it's been really weak. Silver has held above the previous low.
Yeah, silver was great. It came right into those old lows. So if we continue up and get past some of the action from the last few months, then yeah, this big dip below that compressing pennant that we were looking at 3-4 months ago, it's very likely we could see it push back up to at least 15. Now, that doesn't mean the drop, of course, is over by any means, and obviously we've got divergence in there. But I think $15 silver is right around the corner, and then where it goes from there, obviously, we'll just have to see.
Yeah, I think we've had the decline in silver, whether we're over with it or not. Once it finishes this decline, I think you're looking at a big rally.
Sure. Moving over to platinum, it's not unique that when platinum comes into a 10-year low, the 2008 lows, that it bounced that. So that's not really news at all because you expect something like that to happen. You're going to have standing orders at a 10-year standing low. What is interesting is, like silver, it came back down to those levels and also failed to breach them. So if platinum stays above that, we could have a rebound in platinum. Finally, palladium, on the other hand, palladium, which continues to do the exact opposite of everything else in the metals. We had about $160 rise in palladium here recently, but palladium has so much action between here and above that it's going to be real hard to argue palladium is pushing up until we get into brand new territory, 1140s, 50s, 60s, somewhere in there. So looking at the ratios, the thing we've been talking about for years, looking at where the price of platinum compared to the price of palladium is, I still think platinum's the play. I still think silver's the play. And this gets back to our whole point. So if you want to make an emotionally driven or a reactionary decision, you can go ahead and wait for the markets to move and then just react to it. But if you want to make a wiser financial decision, you can do a little bit of research, you can watch some market cycles, you can talk to people like us who, while we're not geniuses by any means, we do try to spend a lot of our time watching how these things play out over time and seeing how they cycle and looking for the best opportunities in the market. And we're always happy to sit down and have that conversation with anybody. We get some great questions on YouTube. We get some great calls from some of our listeners. If you haven't called us yet, please do. It doesn't cost anything to have a 20-minute conversation about your portfolio, which we're always willing to have on a one-to-one basis. You can know that sea changes are always on the horizon, and you can know that markets do fluctuate and do ebb and flow and do cycle, and you can be prepared for it.
Yeah, I don't think you want to be late for this next event, whatever it is. So if you want to talk to us, give us a call, 800-525-9556. You can follow us on Twitter at ICA Gold. You can like us on Facebook. You can visit our website at McAlvany.com. Thanks for listening. Have a great week.